I need you to stop whatever you are doing right now. Put down your phone, close the other tabs, because what I'm about to tell you in the next 15 minutes is the most important thing you will hear about silver before Monday morning arrives. And I am not saying that to get your attention. I am saying it because the data I have been going through for the past several hours has genuinely concerned me. Not in a panic way, not in a sell everything and run way, but in a very specific, very measurable, very real way that I think most silver investors heading into this weekend have completely missed. And if you are one of them, if you are sitting there feeling okay about your silver position because prices bounced on Friday, then this warning is specifically for you. Stay with me through every word of this video, because the second half is where I lay out exactly what Monday could bring, exactly what you should be watching for, and exactly what you need to decide before the market opens. This is my warning, and I mean every word of it. Let me start with where we are right now, so we are all looking at the same picture. Silver closed this week at approximately $59 per ounce. On the surface, that looks like a recovery story. Silver was at $56 earlier in the week. It bounced $3. It ended Friday with gains of more than 2.6%, and a lot of silver investors looked at that Friday bounce and breathed a sigh of relief. They said, okay, the worst is behind us. The floor held. We bounced. We are going to be fine. And I understand why they feel that way. After the week silver just had, down 14% in 7 days, the worst weekly performance of all of 2026, breaking through $60 for the first time since December, testing multi-month lows near 56, a $3 Friday bounce feels like salvation. It feels like the market finally found its footing. It feels like things are turning around. But here's what those investors are not seeing, and this is where my warning begins. The $3 Friday bounce did not happen because silver's fundamental picture improved. It did not happen because the Federal Reserve changed its stance. It did not happen because the 3 rate hikes that are currently priced into 2026 markets got repriced away. It happened for one specific reason, and one reason only. The core PCE inflation data for May came in at 4.1% year over year, exactly matching the consensus forecast. Not lower, not higher. Exactly what economists predicted. And because the number did not come in hotter than expected, the worst-case scenario for rate hikes got taken off the table for this specific data point. The dollar retreated slightly from its 13-month high. Treasury yields fell modestly, and silver, which had been crushed by dollar strength and rate hike fears, got a brief reprieve. But here is what that reprieve did not change. The Federal Reserve is still projecting 9 out of 18 policymakers want rate hikes before year end. Markets are still pricing in 3 rate hikes across 2026. The September rate hike probability is still sitting at 62 to 63%. Kevin Warsh is still committed, he said so explicitly this week, to fighting inflation and will not bow to political pressure to cut rates prematurely. The dollar index is still sitting above 101, and oil, while it has come back to pre-conflict levels, has not yet shown enough sustained decline to meaningfully move the June or July inflation readings. The same forces that sent silver from $66 to $56 this week are still intact. They got a temporary pause on Friday. They did not get resolved. And there is one more thing that silver investors heading into this weekend are almost universally ignoring: the CoinCodex algorithm. Now, I know what some of you are thinking. You are thinking, Claude, it is just an algorithm. It is not always right. Why should I pay attention to it? And you are right that no algorithm is perfect. But here is why this specific forecast matters right now. CoinCodex updated its silver forecast on June 28th. Today, this morning, and it is predicting that silver will decrease by 12.16% in the next 7 days and reach $51.67 by July 4th. July 4th, 1 week from today. That is 2026's Independence Day. And according to this algorithm, silver will be sitting at $51.67 on that day. Not 55, not 53, 51.67. From today's $59, that is a $7.33 decline in 7 trading sessions. And before you dismiss that as noise, consider this. This same algorithm was flagging silver weakness when everyone else was still bullish above $65. The direction of its call has been consistently correct this month, even when the exact number was not. A 12% decline from today's $59 level takes you to approximately $51 to $52. And $51 to $52 is exactly where the next major support zone sits before the truly terrifying levels, the $46 to $48 range that serious analysts have been talking about, come into play. Now let me tell you specifically what is happening Monday morning that you need to be ready for. Because this is not just a vague warning about macro headwinds, there is a specific event hitting the market at 10 o'clock Monday morning Eastern Time that could be the catalyst that decides whether the Friday bounce holds or reverses immediately. Monday, June 30th is the ISM Manufacturing PMI release, the Institute for Supply Management's monthly manufacturing index, and right now the consensus forecast for this number is in the 54 to 55 range. That is a strong reading. Anything above 50 means expansion. Anything above 54 means strong expansion. And here is why a strong ISM manufacturing reading on Monday morning is directly dangerous for silver. Strong manufacturing data tells the Federal Reserve that the economy does not need rate cuts. It is running fine. The economy is healthy, which means the Fed has zero pressure to ease policy, which means rate hike expectations either hold or increase, which means the dollar either holds at its 13-month high or strengthens further, which means silver, which bounced on Friday because of modest dollar weakness, faces renewed pressure the moment ISM comes in strong on Monday. The Friday bounce could reverse in the first hour of Monday trading if ISM manufacturing shows a reading above expectations. And right now, expectations are already for a strong number. Think about what that means concretely. Silver at $59 today. ISM comes in at 55 or above. Dollar strengthens back toward 102. Rate hike expectations firm up again. And silver gives back a significant portion of Friday's gains in the first session of the new week. This is not a scenario I am inventing. It is the direct mathematical consequence of relationships that have been playing out all month. A stronger dollar crushes silver, and a strong ISM reading on Monday morning makes the dollar stronger by reinforcing the case for Fed rate hikes. But there is more, and this is the part of the warning that I think is most important. There are 3 specific levels that every silver investor needs to have in their head before Monday opens. 3 numbers, and I want you to write these down right now because they are going to matter enormously over the next 5 to 10 trading days. The first number is $59. That is approximately where silver is right now. This is your current position. This is the starting point for everything that happens next week. The second number is $68. This is the critical resistance level that multiple analysts, including Gold Silver's research team and CoinDCX's analyst coverage, have identified as the wall between the current weak recovery and a meaningful rally. If silver closes above $68 in any session next week, it means the recovery has genuine momentum. It means the bears who pushed silver to $56 are starting to lose control. It means the gold-silver ratio compression, which USA Gold confirmed is resuming at 68.8, is accelerating. And it means the path toward the institutional targets, JP Morgan at 81, Goldman Sachs at 85 to 100, Citigroup at 110, starts to look credible on a near-term basis. If silver breaks 68 next week, long forecasts December target of $82.87 and February 2027 target of $90.74 suddenly come into range on a realistic timeline. 68 is the number that separates the recovery from the relapse. The third number is $51 to $52. This is what happens if the recovery fails. If ISM Monday comes in strong, if the dollar reasserts, if the rate hike narrative tightens further, and if silver cannot hold the $54 to $55 support zone that analysts have identified as the next meaningful floor below current levels. CoinCodex 5167 by July 4th. TD Securities' average forecast of $44 for 2026 on the bearish end. These are not made-up numbers. They are documented institutional and algorithmic forecasts from credible sources, and they represent the scenario that happens if this week's 14% decline was not the bottom, but just one leg of a larger move. Here is what I want you to understand about the relationship between these 3 numbers. 59 is where you are. 68 is where you need to get to confirm the recovery is real. 51 is where you go if it is not. You are sitting exactly in the middle of those 2 outcomes, right in the decision zone. And Monday morning's ISM data is the first real test of which direction this week resolves. Now let me give you something practical, because a warning without a plan is just anxiety, and I do not want to leave you anxious. I want to leave you prepared. So here are the 3 specific things I want you to do before Monday morning opens. The first thing is know your position size relative to your risk tolerance. I'm not telling you to sell silver. I'm not telling you to buy more silver. I am telling you to know exactly how much you have in silver and how much more it could fall before you would be forced into a decision you do not want to make. If silver goes to $51, that is another 14% from today's 59. Can you handle a 14% additional decline without it creating a financial emergency? If yes, hold your conviction, watch the signals, and trust the long-term thesis. If no, right now, Sunday night before Monday opens, is when you think about that. Not at 10:15 Monday morning when ISM has already hit and silver is already moving. The second thing is watch ISM Monday at 10 a.m. Eastern. Not after the fact, not from a recap video on Tuesday, live. Because what happens in the first 30 minutes after ISM drops will tell you an enormous amount about whether the Friday recovery was real or whether Monday reverses it. If silver holds above $58 after a strong ISM reading, the bulls are in control and the recovery has conviction behind it. If silver falls below $57 after ISM, the bears are reasserting and the 54 to 55 support test becomes the immediate next scenario. The third thing is do not make emotional decisions based on Monday's first hour. Markets are most volatile in the first hour after major data releases. Prices move fast. They often overshoot in both directions before settling into their true post-data direction. If ISM is strong and silver falls sharply in the first 15 minutes, do not panic sell at the low. If ISM is soft and silver surges in the first 15 minutes, do not chase the move and add at the high. Wait for the first hour to settle. Watch where silver finds equilibrium after the immediate reaction. That equilibrium price tells you far more about the real direction than the first 5 minutes of noise. Now let me zoom out and give you the context that holds all of this together. Because the warning I am giving you tonight is not a permanent bearish call on silver. It is a specific near-term warning about a specific near-term risk that I think most investors are not prepared for because they ended the week feeling okay about the Friday bounce. The long-term case for silver has not changed at all. 6 consecutive years of supply deficit, 762 million ounces of cumulative stockpile drawdown since 2021, 120 to 125 million ounces of annual solar demand, 70 to 75 million ounces of electric vehicle demand, growing AI data center consumption, BlackRock and JP Morgan both maintaining $80 year-end targets, long forecast showing $82 in December and $101 by March 2027. These are real numbers from real institutions. They are still there. They have not changed because silver had a bad week or because ISM might be strong on Monday. The short-term risk and the long-term opportunity can both be true simultaneously, and the most important thing you can do as a silver investor right now is not confuse the two. Short-term risk says, watch Monday carefully. Long-term opportunity says, the structural case remains intact regardless of what Monday brings. The investors who lose money in markets like this are the ones who let short-term volatility make long-term decisions for them. They panic sell when the ISM comes in hot and silver falls Monday. They lock in their loss. And then they watch from the sidelines as the long-term structural forces reassert themselves and silver recovers toward $80 and beyond. Do not be that investor. Be the investor who understood the risk, managed their position size accordingly, watched the right signals at the right times, and held the conviction that came from understanding the mechanism rather than reacting to the price. This is my warning. Silver investors are not ready for what Monday brings. The ISM manufacturing data at 10 a.m. is a genuine risk that could reverse Friday's bounce. The CoinCodex 5167 July 4th forecast is a genuine risk that needs to be understood. The 3 rate hikes still priced into 2026 markets are a genuine ongoing headwind that the Friday bounce did not resolve. But underneath all of those short-term risks, the fundamental case for silver, 6 consecutive years of supply deficit, institutional targets above $80, long forecast showing $101 by March 2027, is more intact today at $59 than it was at $122 in January. Because the price has come all the way to the structural support. The price and the fundamentals are closer to alignment right now than they have been in years, and when they fully realign, when the Fed eventually pivots, when the dollar weakens, when the Iran peace holds and energy inflation fades, the move that follows is going to be significant. I am John A.G., and this is what I am here for. Not to tell you everything is great when the data says otherwise. Not to panic you when the long-term case is intact. but to give you the honest picture so that you walk into Monday morning prepared instead of surprised. Watch ISM at 10 a.m. Know your 59, 68, and 51 numbers. Manage your position relative to your risk tolerance. And subscribe right now so you do not miss my real-time update the moment ISM drops Monday morning, because that is the moment that tells us which way this week resolves, and you need to be watching it. I will see you Monday at 10. Be ready.